These are very interesting times, to say the least. Gold has surged by $500 an ounce in 213 days, from 2,500 to 3,000. That's the fastest $500 price jump in history. No talk about it, no fanfare. In my mind, the smart money has already shifted to precious metals and in front of potential market trouble. At the same time, you have the hedge funds with their lowest exposure to the Mag 7 in over 24 months. I think we're a long ways away. And silver, to that point, is that argument on steroids. It's the most undervalued, overly manipulated market on the planet, which holds the largest concentrated short position on COMEX, concentrated by a handful of 8 commercial banks that short the crap out of it.
Gold has surged to an all-time high of $3,050 per ounce in March 2025, marking a gain of over 15% since the start of the year. This rally has outperformed the S&P 500, with the gold-to-S&P ratio hitting its lowest level since the pandemic, suggesting a growing investor preference for safe haven assets amid economic uncertainty. Silver is also drawing attention, with analysts forecasting a potential rise to $40 per troy ounce in 2025. As both gold and silver reach record levels, ETFs tracking these metals have delivered an impressive average return of over 30% in the past year. Meanwhile, foreign investors have been offloading U.S. Treasury securities. Treasury data shows that in January alone, foreign residents sold a net $13.3 billion of U.S. notes and bonds, with maturities exceeding 1 year. Notably, global central banks, a key source of foreign demand, had been consistent buyers for 15 consecutive months before this shift. Andy Schectman, president of Miles Franklin, argues that gold remains widely misunderstood despite its strong performance. On silver, he warns of ongoing market manipulation. He criticizes GLD and SLV as flawed investment vehicles due to their custodians, mainly JP Morgan, which previously faced a $920 million fine for metals market manipulation. Schectman believes savvy investors are quietly moving into precious metals, positioning themselves ahead of potential market volatility. We're about to explore the video, but first, subscribe and hit the bell icon to keep up with our newest uploads.
This is part of the reason that there's such a lack of understanding of gold. That has doubled the performance of the 10-year Treasury in the last 25 years. That has, when you look at it, its performance last year, it was up, gold up about 40%, and the 10-year Treasury up 4% in a market that is, net not seen any new central bank purchases of the Treasuries at all since 2014. Now, that's not to say that there hasn't been buying of Treasuries by central banks. There has, but the net, there's been more selling than buying. And that extra selling that normally went into Treasuries, in my mind, has gone into gold. Why? Not only has it doubled the performance of the Treasury over the last, at least since the beginning of the century, but it has no counterparty risk. And we've talked a lot about that, the weaponization of the Treasury market. You and I have discussed that at length. And equally as important, and going back to the lack of journalistic integrity in the media, gold is the only other tier 1 reserve asset in the world alongside U.S. Treasuries. Why don't more people know that? It seems to me that should be something that everyone knows. If we know that the U.S. Treasury is the supreme asset, the most liquid tier 1 asset in the world, why would we not be told by an unbiased media that gold has been transformed or raised to a tier 1 status? Well, we haven't. So that's one issue, lack of understanding, and gold has outperformed just about every traditional asset for better part of the last 20 years. It's as I mentioned, doubled the 10-year Treasury. It's beat the S&P 500 just barely, 9.9 versus 9.6 since 2000, with dividends reinvested even. And I think when you see that the United States, as we talked about last show, has become a net importer of gold since November, it becomes even more interesting. With the largest deposits we've ever seen into the COMEX market ever, this should be front and center. In the February contract, 5.9 million ounces of silver or gold were delivered. That's the largest delivery ever for a single month ever. JP Morgan, who only buys for their clients, according to Blythe Masters, who used to run their metals desk, delivered $4 billion in gold into the COMEX in February. Why isn't there more talk about that? Who's got 4 billion as a client to have shipped into the COMEX? These are very interesting times, to say the least. Gold has surged by $500 an ounce in 213 days, from 2,500 to 3,000. That's the fastest $500 price jump in history. No talk about it, no fanfare. In my mind, the smart money has already shifted to precious metals and in front of potential market trouble. At the same time, you have the hedge funds with their lowest exposure to the Mag 7 in over 24 months. You have a 7-to-1 insider selling to buying. At the same time, you have institutional investors who have increased their gold positions by 45% since 2021. And as I mentioned, the metal has outperformed the S&P 500 again over the last 24 months. You can go back even further and find that to be the case as well. The big money is quietly positioning, and you all we hear about is the Mag 7 and Bitcoin. So I think that's certainly something to keep an eye on. And there's still manipulation going on. One of the things that people are talking about right now is this really big short position in PSLV. You know, when people have asked me about buying ETFs, I say GLD and SLV are two of the worst products ever made. The custodian has done a tremendous job at distancing themselves from any fraud or liability. And guess who that custodian is? Well, in both cases, the primary custodian is JP Morgan for both SLV and GLD. And by the way, that's the company who paid a $920 million fine to the Justice Department for manipulating the metals market a couple years ago, the largest fine they ever handed out. Yet, here we are, they're controlling the largest silver trust in the world and one of the largest stockpiles of gold in the world, alongside BlackRock. And so what's been going on with PSLV is, you know, when people would say, well, you know, I have to buy paper with the fund that I'm in or the account that I'm in, or I can't buy physical. Well, I would say buy PSLV. Eric Sprott's an amazing guy. I've known him a long time, although he's pretty much out of the loop now. I would always say that in a world of paper, PSLV and PHYS is the best choice. But you look at what's going on there and you got to wonder, is that even good advice anymore? You go back and listen to Rick Rule interviewed last time there was a massive uptake in, you know, blow off in silver and huge investment into PSLV. They had to go into the open market and buy everywhere and anywhere they could, whether it be London, whether it be the United States COMEX, wherever they could. And they had a hard time filling it. So when there's greater demand purchasing of PSLV, which is the silver trust, they need to then go into the open market and buy silver. So conversely, if there was massive shorting of PSLV that overwhelmed the number of purchases, they don't need to go into the open market and buy copious amounts of silver. And we keep hearing about all of the silver shortage everywhere at the highest level in COMEX and LBMA. And the LBMA, there is a massive silver shortage, huge silver shortage in the respect that they've delivered 44% of the float, the amount of available silver in the last 3 months, and now have gone from a T+1 settlement in London, meaning you do your trade on Monday, that's T+1 Tuesday. Silver should be moving on Wednesday, and they're now saying 8-week delivery delay due to constraints with lack of trucks and personnel. I mean, it sounds more like a default to me. They're freaking out. And you're seeing huge deliveries coming off of LBMA and COMEX and the Shanghai Exchange. Big money is standing for delivery, and silver is becoming hard to get. And when you have huge naked short positions, where on the LBMA market, they're trading 3.5 times annual global mine supply every single day, according to some of the LBMA market analysts. Even though they only post that they're doing, it's already more than the float, but at the same time, they say those are only the final settlement numbers, and they're actually trading 10 times more than that throughout the day. You have a situation where if just a very small percentage of the people who own these contracts stand for delivery, there is a very, 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 very big problem. And the same thing is true with the gold held at the LBMA. They have a situation where they have 36 million ounces of gold standing behind 380 million ounces in spot contracts that could stand for delivery, 1/10 the amount of gold behind it. Same thing with silver. So the participants, they don't want we're dumped onto the market in PSLV in 1 minute. That's more than you would see in weeks sometimes, and that's shares that were being sold short to drive down the price. Not only the price, really more so to drive down the ability or the demand or the need for the custodian to go in and buy more silver. So it had to overwhelm the amount of interest, new interest into it, so that they don't have to go into the open market because there's more short than there is long here, imbalancing it. They don't have to go into the open market to buy more silver. This is a big deal.
With 2025 shaping into one of the most unpredictable years in modern history, soaring global sovereign debt and escalating geopolitical tensions have driven investors toward gold as a safe haven asset. President Trump's trade policies are reshaping capital flows, with gold emerging as a key beneficiary. As historically overvalued equities undergo a downward correction, undervalued gold stocks are gaining momentum. After gold set 46 new all-time highs in 2024 and another 16 so far in 2025, many analysts believe this could be the year silver finally breaks out, following 4.5 years of consolidation below $30, establishing a strong foundation for a significant move higher. What's your strategy for buying precious metals? Join the conversation. Share your thoughts in the comments, give us a thumbs up if you found value in this video, and subscribe to stay engaged with our community.